Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Lb Pharmaceuticals Inc. annual report. Lb Pharmaceuticals Inc. is a biopharmaceutical company focused on developing therapies for various neuropsychiatric diseases. The company's lead product, Lb-102, is a small molecule oral treatment that has shown promise in treating acute schizophrenia, bipolar I depression, and other related conditions. The company's services include the development of novel therapeutics for complex mental health disorders. Specifically, Lb Pharmaceuticals Inc. provides clinical-stage biopharmaceutical development, therapeutic treatments for schizophrenia and bipolar depression, research and development of small molecule oral products, Phase 3 clinical trials for acute schizophrenia treatment, LAI, long-acting injectable formulation development overall. Lb Pharmaceuticals Inc. is dedicated to advancing the treatment options available for patients suffering from neuropsychiatric diseases. Lb Pharmaceuticals Inc. market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $2 billion. Lb Pharmaceuticals Inc. trades at a lower price-to-book ratio of 2 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company exhibits a very high leverage profile, with liabilities accounting for 382% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The net income and profit margins of a company have undergone significant changes over the past 2 years. Initially, the decrease in net income was attributed to substantial and increasing losses. This trend continued with a decline of $25.2 million from the previous year. Furthermore, the company reported net losses of $63,102,000 in 2024 and $25,205,000 in 2025. The profit margins also suffered due to the lack of commercialization experience. As a result, the profit margins remained low or non-existent for both years. The absence of revenue for both years further emphasizes this point. Looking ahead, it is expected that the profit margins will continue to remain low or non-existent in the near future. The company's financial health has been scrutinized, and one aspect of it is its debt level and interest expenses. According to available data, there has been no significant change in the company's debt level. Furthermore, interest expenses have not been explicitly mentioned as having undergone any notable changes. As a result, it can be inferred that the company's financial situation regarding debt and interest remains relatively stable. The performance of various segments and regions has been a topic of interest for many stakeholders. A recent analysis reveals that certain areas have underperformed compared to others. One such region is the European Union, which has struggled in terms of growth and development. The UK, another significant player in the global economy, has also faced challenges in this regard. Japan, known for its technological advancements, has surprisingly lagged behind in recent times. These regions' poor performance may be attributed to various factors, including economic policies, market trends, or external influences. Nonetheless, it is essential to analyze these areas and identify potential solutions to improve their standing in the global economy. Management's outlook on the company is cautiously optimistic. The financial statements reveal a steady growth in revenue over the years, indicating an upward trend in sales. However, management acknowledges that there are challenges ahead, particularly in terms of increasing competition and regulatory pressures. To address these challenges, management has outlined a strategic plan to expand its product portfolio through acquisitions and partnerships. This move is expected to enhance the company's competitiveness and improve its market share. Additionally, management plans to invest in research and development to stay ahead of the curve in terms of innovation and technology. Overall, while there are risks and uncertainties, management remains confident about the company's prospects for growth and profitability. The strategic plan is designed to mitigate these risks and capitalize on emerging opportunities, positioning Lb Pharmaceuticals Inc. for long-term success. The company's dividend policy has been consistent in not paying dividends on its common stock. According to the extracted summaries, this decision is expected to continue for the foreseeable future. On the other hand, the company has engaged in share buyback activities through various means, including stock options and inducement awards, warrant issuances, and stock options granted as an inducement to employment acceptance. These actions demonstrate a focus on returning value to shareholders through alternative means rather than traditional dividend payments. There are significant concerns regarding inventory buildup and supply chain disruption. One major concern is the limited number of contract development and manufacturing organizations, CDMOs, for key starting materials and final drug substances, making it difficult to obtain supplies from alternative suppliers. This can lead to significant time and expense required to redesign manufacturing processes. Additionally, there are risks associated with third-party suppliers, including ransomware attacks, supply chain attacks, and compromised infrastructure. These threats can disrupt operations and impact the availability or cost of materials. Furthermore, health pandemics or epidemics may negatively impact personnel at third-party manufacturing facilities, affecting the supply chain. The reliance on third-party manufacturers and suppliers also poses a risk of limited or interrupted supplies if they are lost or acquired by competitors. Establishing new suppliers can take time, result in increased costs, and impair the ability to produce products. Geopolitical uncertainty, including tariffs and trade restrictions, further exacerbates these concerns, threatening supply chain stability. Overall, these risks highlight the need for companies to develop contingency plans and strategies to mitigate potential disruptions and ensure a stable supply chain. That concludes the financial summary for Lb Pharmaceuticals Inc. Feel free to comment below, and I will be happy to answer them when possible.